Good day, guys, and welcome to another beautiful trading series with the Golf Club FX. My name is Mba George, aka Legacy, and I remain your very humble host. Today, I know a lot of people have been asking, a lot of people have been waiting to, hear from me on the trade breakdown that gave us profits today, right, on the community. So, this was a London section trade I took this morning. I also shared it on the community, and a lot of traders made a whole lot of money from this particular trade. It was beautiful, man, and I'm really proud of you guys. I'm really proud of you guys. So with that said and done, I just want this video to be very short, so I'll just be going straight to the analysis and the trade breakdown for today, right? Very quick and very sharp. So we took a trade, AUDUSD, right? And let me share my thought process before I got into the trade. It was a very beautiful trade. So first of all, I went to the daily time frame, right? So sorry if my chart is really scattered. I just have a lot of things drawn out. So on the daily time frame, because I'm a day trader, I trade the daily time frame. I noticed that the trend of this market, the overall trend of this market is bearish, is a downtrend. You can see that it has just been trending down. So anything any trader should be looking forward to doing on the lower time frame of like 1 hour, 5 minutes, 15 minutes, the trader should be looking for sell opportunities, right, to the downside. Why? Because this market on the higher time frame on the daily time frame, it's going down, right? So that is my first confirmation. Just confirm that the trade and the market is literally pushing to the downside, right? Then my second confirmation was the order block that I noticed that price came to mitigate, which is the daily order block, and which is at this zone right here. This is the order block I was looking at, that last candle before this massive drop, right? So that was the candle, that was the order block I was looking at, and you can see how price literally, after breaking to the downside, leaving that order block behind, you can see how price came back and tapped that order block right there, tapped the order block and started dropping. So order blocks, if you don't really understand what I mean by order blocks, we also call it institutional candles or banker candles, right? For those who are already on the course, you guys will understand what I am really explaining here, right? So if you really don't understand that, do well to get yourself the course, right? I've launched the course already, and the course is massive. It's massive. In fact, it's massive. Just get the course for yourself. It will teach you everything, starting from the basics till you get to the expert stage, right? So that's my second confirmation. Remember, the first confirmation was the overall trend of the market. The second confirmation now is this order block that price mitigated and drove down to the downside, right? Now, what is my third confirmation? My third confirmation, when I zoom in, after price came down, when I zoom in, you can see that price created what I call double top, and double top is what we call a reversal position. You can see this is the wick of this candle. You see price rejected here, went down, also came back here, rejected here, and closed this candle below this. So this is a double top. If you really don't understand what double top signifies, simply just get yourself the course, right? It will really explain everything in detail. So this is my third confirmation, right? The double top. So seeing these three confirmations on the daily time frame just shows me that everything is going to be going to the bearish side. Everything is going to be going to the downward side. So I simply just dive down to my 1 hour time frame, right? And when I got to my 1 hour time frame, two things I noticed. I noticed two sides of liquidity I noticed the first side of liquidity, which is the upside liquidity, which I also call the equal high liquidity. So you can see price tapped on this zone right here, rejected, came back, tapped on this zone right here, rejected. So this is now a liquidity point, right? Why? Because there are a lot of sell orders around here, right? Good. So, and then what did price do? When price was coming back to create that liquidity, also price engineered more liquidity, and this is what we call the trend line liquidity. So the first liquidity I saw was the equal high liquidity, and the second liquidity was the trend line liquidity. So because I know that this trade is the overall trend of this market is bearish, so all I'm just looking forward to doing is to sell the market. So I noticed this order block right here, right? You can see this beautiful order block. Let me zoom in. So you can see this beautiful order block right here. So I was just waiting for the market to come and reverse on that order block right there. And you can see so when I noticed the two side liquidity, all I was waiting for was for price to clear the first liquidity, which is the equal high liquidity, and that would be my fake out. So price will literally clear that as a fake out and then deceive people that it will come back to retest to continue to the upside, right? But at the same time, price engineered what we call the trend line liquidity that has a lot of buy orders on it, right? And that is called liquidity. So these are liquidities. Price tapped on this trend line, pushed up, tapped, pushed up, tapped, pushed up, tapped here, pushed up, tapped here, pushed up, so price, every time price tapped on the trend line, it bought, it went up, engineering liquidity that it must kind of come back to take, right? So that was my observation on the 1 hour time frame. And because I observed that on the 1 hour time frame, all I was just looking forward to doing is to catch the trade to the downward side. That was just my own confirmation. That was just all I was looking forward to doing, right? Because the overall trend is bearish. So I simply dive down to my 5 minutes time frame to observe what the market would do to come against the trend line liquidity. So immediately price cleared the liquidity above, that is the equal high liquidity. Price created what I call the signature pattern. The signature pattern is a very, very beautiful pattern that we in the IM Academy we trade, and a lot of traders who have learned from me, we also trade the signature pattern. In the signature pattern, what happens here is that price tends to consolidate, and in the point of consolidating, price invites both the buyers into the market and also invites the sellers into the market. And when price invites both buyers and sellers into the market, the banks also come into the market to play with both the buyers and the sellers, right? To rip them off their money, right? And this is what happens. So price is consolidating. It taps here. You see, it tapped here, came down. It's just creating relative equal highs and equal lows, right? Tapped here, came down, right? A lot of people put orders right here, put their stop loss above here, right? It came down. Those who missed the trade say that if it comes back to tap, they would impute orders also. And after the thing came to this point, he also imputed orders, and a lot of people sold the market. And at the same time, a lot of people are also buying this market, right? A lot of people are also buying the market. So both sellers are selling, buyers are buying, right? And what did the market do? You see, the market immediately took out the sellers, cleared them out. You see how it pushed right up, took out the sellers, came down, also immediately pushed up again to take out the sellers, and then immediately you can see this massive drive down to take out the buyers. So both the sellers and the buyers in this scenario lost money, but the banks didn't lose money because the money that they imputed here was still left there and that money helped them to drive down price with heavy momentum to take out these stop losses below here. And you can see how they immediately came back to go and take that money. They immediately rose back up to take that money, thereby mitigating this order block, or we call it the banker candle, right? And you can see our price came back, mitigated that banker candle, never broke that point right there, and immediately dropped to the downside. So when price dropped to the downside, that was just like the confirmation that I needed. So price dropped to the downside, and then also when it dropped to the downside, you can see it also did another consolidating. It consolidated for a while and then immediately rose up, cleaned out the liquidity above here, that is, took out the sellers, and they immediately dropped, taking out the buyers. And you can see how it also came back again to mitigate this order right here. And this is also the signature pattern that also played out here. So when this signature pattern played out here, when they mitigated this order block, I immediately noticed this breakout point right here, and that was where I imputed the sell stop for the community to enjoy the trade, right? So the community got into the trade right here. When the market came down, rejected, and then dropped, it triggered everybody's entry, and you can see how it dropped into massive profits. This is all profits. This drop from here to this point, it retraced a little bit back and then dropped to the final TP, which gave us over 1 to 2 on this trade, right? So this is all I was looking out for. This is how I took the trade. I can see this was how I took this trade to the down side. So when price dropped, I took my Fibonacci retracement to cut it from here to here, and then when price mitigated, I just immediately looked for this breakout point right here, and you can see how price broke out, hit our first take profits, retraced back, and hit our last take profits. So this is how the trade went for today. Thanks guys for watching, and stay tuned for more educational videos like this. Bye for now, and keep being the best trader that you are. Bye.